Good morning, everyone. Microphone check. Screen check. Yeah, there we go. Looks like everything is working correctly here. Welcome, welcome, welcome. All right. Why is that saying the audio stream bitrate's messed up? Hold on one second here. Just gotta make sure this stuff is all... I don't know what the heck this thing's complaining about. Can you guys hear me on the YouTube side? I mean, the microphone's lighting up, and I believe it's just giving me a warning, and I just want to make sure. I see the Zoom side's working fine. Yeah, all right. Well, whatever. Who knows? Welcome to Tuesday? Monday? Tuesday? Feels the same. Anyway, before we jump in on the right side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump in as well. On the YouTube side, the broadcast does have between a 5 and 30 second delay. That will obviously impact the things that I'm talking about in any given moment, so keep that in mind. Also, just taking a second, give a shout out to our latest members that joined overnight, yesterday, this morning, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. We're 10 subscribers away on the YouTube side, speaking of which, before the next giveaway. We're 10 away, so the next giveaway's only got 10 more to go, and then we can launch that video and get the second one of the 4 giveaways. Super exciting. If you aren't a member yet, well, first off, I guess you could check out that video and see if you can win the giveaway. But if you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. The YouTube family gains access to the extended hours trading room, which continues the morning room from 10 until whenever we close, 10:30, 11 o'clock, depends on what's going on. Along with that, every member gains access to the Discord chat server, and of course, you get the awesome badge next to your name here on YouTube that show your support, plus it just looks cool. To understand our day trading approach and what it is that I'm doing every day in the room, look no further than the Day Trading Academy. Listen, this isn't a small PDF you're going to finish in an afternoon. It does have a jumpstart course to get you started, but you're looking at about 19 plus hours of course and study material, homework, review, etc. You best tuck in. It's not a small journey by any means. Lots and lots of info. And then finally, the big one, the big kahuna, the Mac Daddy, the VIP. And VIPs have exclusive permanent access to the non-delayed stream, covering the entire morning session from 9 until whenever we close up shop, to ensure that you are on the fastest connection possible. Sometimes we even do pre-game shows, not this morning, but sometimes we'll get that stream going a bit early for VIPs and see what's going on. And that way you don't miss a beat along the way. Alongside that, VIPs also have access to the monthly webinars, private one-on-one events, and scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside me today, analyzing these crazy markets of ours. Let's take a look at the news, take a look at some charts, see what's going on for today. Don't forget to grab your morning DP levels. Those are posted for the major 7 markets: NASDAQ, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. They're all waiting there for you. If we look down the list, we can see a lot of the news took place at when? 8:30, and that was core CPI. That's usually not a huge mover. It is ranked as a big moving announcement, but not like what we saw. Like what we've seen so far. Yeah, happy dump day is right. I mean, this kind of movement is... You'd expect it to be like non-farm payrolls or something, like crazy movement going on so far this morning, and not really big news to back it up, at least on the news calendar. Going on a little bit later this morning at 12 o'clock, FOMC member Bostic speaking. At 1400, federal budget balances. 1430, FOMC member Bostic speaking again. And then at 1630, it's Tuesday, we've got our API weekly crude oil stock numbers, and that'll give us a heads up as to what to expect for tomorrow. And then a general overview. Let's take a look at the charts and all that fun stuff, see what's going on here, starting off on the S&P. And, I mean, really, the S&P, this is kind of needed, you know? I mean, let's be real here. If we look at the last few pullbacks from a value perspective, the big pullback is 1.73%, and the small pullbacks 0.53. What's this guy right here? 0.69. Well, you can't, little one inside there, 0.63. This all is kind of one larger one, huh? So it's either we've got like, man, they're kind of spread all over the place. It seems like they're around 0.5 to 0.6%, or it's going to be 1 to almost 2%. Some pretty big drives. I'm going to ignore this one because this one sort of doesn't match. It doesn't fit anything else that's going on here. Let's see if we can gauge something else that kind of confirms. What about some of these? I mean, obviously all of those are like 0.5% pullbacks, but what about this, like this little inside one? It's another 1.4 from top to bottom. It's about 3. Okay. So at the moment, the average pullback that we should be expecting in terms of a trend continuation is going to be around 0.5 to 0.6. If we're hovering around in the middle there, we'll just say like 0.65. Okay. So generally speaking, then the S&P should have some downside movement, inclination at least down to around like the 4350s or so. That would only be the half DP down, mind you. So, I mean, man, this thing could just really, really love a nice little pullback here. But as it stands right now, I mean, honestly, we're kind of on a value pullback. Nothing has really changed from that perspective. If we zoom in a little bit closer from the Elliott wave side, because it's blatantly obvious, we've got the first portion here into the second portion and into the finalized portion, which only made it up 0.51. That's atypical. You're usually going to see them rotate up to like at least 0.6, and they haven't made it there. And that could explain why this dump was so aggressive. But that also leads me to believe, like, well, were they just trying to come back and grab some volume? Like, what's going on? Let's take a look at the volume from the bottom. And there's the POC. So we got the POC bounce off 4360, and that is also moving the POC to the upside. We've got the initial sellers that we were talking about, maybe getting stuck down here, absolutely railroaded. Now we've got more volume shifting up with the POC. Another big volume chunk right here, you'll notice. And, I mean, really, that looks like they probably went 2 times up. Got 2 big nodes up there, and the last POC was here. So it kind of feels like they not only doubled up, they tripled up. If they had 1, they're now at 3. So they're trying to draw their average up to, the upper third, and that would put their average hovering right around here. Maybe a little bit further down if it wants to go just a bit more. So, I mean, at the least, maybe downside objectives like 4350s to 46s. Still has some potential to go, but we are running into that POC. And just as confirmation, I know we haven't hit the NASDAQ yet from the morning move, but just out of morbid curiosity here. Okay, they didn't shift or hit the POC yet. So over on gold, we've got this sideways absolute train wreck bearish divergence as well. Yeah, I mean, there's a lot of stuff. We've been talking about it for a long time, right? I'm still scared that this little 0.5% pullback, like, really? I mean, the bigger pullbacks are 30%. So I don't know. We might be in for some running. Anyway, on gold, this sideways action that we've got going on is attempting to do one of 2 things from the short term. If we look from the bottom and go across, obviously that's going to spend so much time there that they're going to creep a POC away. You'll also notice that I've got some bugged data in here. That doesn't help. But as far as a POC, I believe it's still up here at 1806, and they're trying to get it to transition. Now, if we're looking at it from a left shoulder, head, right shoulder perspective, given that this is turning, really aggressively down, and maybe it goes back up again. But as this stands with the increasing shoulders, and actually it's almost a double bottom. I can't even draw it on there. Missed it so shallow. With that... both sides have an argument. That's the problem here with gold, right? You could argue sellers have a possible major trap above the highs and every reason in the world to be short, and the bulls have every trap on the planet on the bottom. The issue isn't that they all have a reason, it's that nobody's been stopped out yet. Right? Like, nobody's been invalidated. They all know they have a viable reason, but we haven't had the outcome happen. And I mean, honestly, if I had to put my bets on, I would gauge more to the upside. But really what we need to see is that POC shift, that long-term change, which we know, we're looking at gold, has already happened. We had that fantastic POC shift, in fact, and it had a beautiful pullback to retest. And, well, not so much a pullback to retest aside from that quick little wick back, technically speaking, I guess. But we're kind of grinding our way up. The only thing that really hasn't happened is a very obvious nice continuation pullback, which could very easily be looking for that 1777.8. That would make a lot of sense. So from a bull's perspective, I think a lot of buyers do want to buy into this. And from the POC side of things, we're above it, so the longs are technically right at this point in time. And assumably, big money is usually right. We have to assume then that they're long, at least for the time being. But it would make a lot more sense for them to pull back, get a slightly better, price. or at least re-attempt it. Kind of a mess right now. Over on crude oil, speaking of messes, this thing really isn't doing a whole lot of anything. It's a nice rally to the upside, and the big thing, looking back at that previous swing, they did break above it. When they break above a previous major swing, how strong did they break above it? Well, that one didn't do so well. Okay, well, if it fails, what happens? It came back and acted as resistance. Like, crap. They've got a lot of problems happening here that they really don't want to see happening. It doesn't mean that the bulls can't get this thing continuing to go back to the upside and really ripping away. But there are going to be some really big issues if they can't start getting something going soon. We've got a lot of resistance up here. If we're taking it from the top to the bottom, we can see that we've got that POC in the middle. More recently, we have just broken above it, held as support, broke further above it, made a new swing high, and held as support. The only thing that's missing is continuation. That's a little bit of a bummer. But realistically, the buyers who bought on this dip, I mean, does it have to go all the way back up to the highs? Really? I mean, it might have to, but judging from a realistic standpoint, if they were just looking at like an actual risks 100% got their targets filled. But looking at potentially, maybe they put their stop underneath this low. I know it's a terrible stop location, but are they getting hit? And they're not. So even for, these narrower perspectives, there's still some open room, unfinished business that's got to take place. And that means that if this starts churning back, those buyers are going to be massively disappointed, and we start seeing it roll back over to a larger new pullback, and things get really nasty. So we'll see, but man alive, feels like we're on a bit of a cliff here. Euro is still continuing to the downside. I mean, this isn't a surprise. When we zoom out to the larger perspective, I doubt they've changed the POC yet, right? Let's go all the way to the end. Yep, POC still way up at the top. So we haven't seen the POC shift, which would suggest that sellers are still short and still grinding their way down. If we look at this from a logical perspective for targets, their 2-to-1s would have been down here. They blasted through that, not even a sweat. So from that, then let's see where they were able to go down to, right? We've got maybe a 4-to-1, almost. The next major objective would be a 5-to-1. So if sellers are looking for a continuation to the downside, the next major point of potential interest, at least 1.17400s. That does also line up pretty nicely with a little wedge low, depending on when it gets there, though. We still haven't shifted the POC, though. It makes it a little weird. Over on Bitcoin, nice continuation, pullback to the downside, but really, where's it gone? The answer would be nowhere. It still hasn't gone anywhere, but the one thing that does stand out is maybe a 3-press lower high, right? We've got those 3 very obvious lower highs, could be begging for a continuation down, another drop. Would make sense to at least retest the 30Ks, but you know me, I'm still looking for those 20s. I want that big push. Major point of interest, obviously, would be a lot of stops are going to be underneath here. And that would be a perfect absorption point because buyers can buy there with a stop underneath the low, but targets way up to like 60,000. So, I mean, swing traders are still going to be picking off the lows, but this could need a bit of a deeper dive at the moment. And the same goes for Ethereum. We're just not seeing that rotation back up. They tried, and Ethereum between the two, it was definitely more aggressive, but the same could be said about this downturn. It really ripped the Band-Aid off and churned lower, and then they held that previous swing low not as support, but as resistance. Big potential to the downside, at least for maybe an ABCD. Man, that one's way down there. Hang on. A full-on ABCD would put it at 1829.94. Hefty, hefty, hefty. Beautiful pullback here from the bigger perspective, at least. But zooming into the NASDAQ, yeah, I'm in the same boat with you, Steve. I'm hoping that this volatility just brings some, or volatility comes with this, and we can have a bit of fun in here. But, you know, fingers crossed at least. Looking at the daily, we already know what's going on in the daily perspective. There's your typical 2.3% pullback. Whoa, what a shock. Rolled its way all the way back up to the highs, and here we sit again. Until we get, like we talked about before, a multitude of at least 3 bear bars back to back, and preferably 3 to 5, we're likely not going to have any bearish descent of any substance much more than 2.3%. When the market tends to churn and go sideways and stack 2, 3, 4 candles that are bearish, it usually has some pretty strong follow-through that ends up being closer to the 4 or 5% realm, maybe even larger. Right now, we're still kind of churning its way up. In the 60-minute. Wow. What a mess. The POC hasn't shifted on the 60-minute, though, huh? That's weird. Didn't it shift on the... Oh, no, I'm thinking the S&P. Sorry. The NASDAQ has not shifted yet. Okay, that makes sense. 13,649.50 is still the POC that's hanging down there. Although, I mean, it's pretty obvious to see there is one that's creeping up right around the 14,550s. A lot of volume building up in there. From the 15-minute perspective, looking at what's been taking place so far, we've got a pretty nice rotation off of the lows. And realistically, as far as trend continuation or trend resumption or any of the above, if we're looking at this from a cyclical standpoint, the first pullback was confusion. We talked about this already, where we had this L3 confusion, like, I don't know what's going on. Big dive down, but now a big move back up. Who knows? Place your bets. Well, the market did end up rotating back to the highs, and the highs was not a small breakout by any stretch of the imagination. So with that continuation to the upside, the next major pullback off of that L3 hold and aggressive blow off on the top is typically going to be an L1. And that's where that swing trade came from right there with a rotation back up. Now that we've got that continuation higher, they have a chance to keep this L1 trend going. And they dove back. They held the L1 multiple times. And look at that retest right before the final move. Rotates all the way back up to a new high. So they're continuing these bullish rotations up and up and up and up and up. But what is the expectation when the L1 cracks? Right? When the L1 cracks, the expectation is to find support where? Off of the L2. Well, I wonder what happened on that low. That's weird. We found some support off the L2. Now, it doesn't mean that the bulls have to get this thing spiking all the way back to the upside. If we're looking at this from a risk-reward standpoint, we can see that a 2-to-1 actually would be back up to the top of L1, which would fit a broken L1 reversal in the opposite direction. Although, you know, shorting this is going to be complicated given the overall trend and the possible conviction from the bulls on this move higher. But this is a zone of interest that is showing up. It's demonstrating that it's doing what it's supposed to be doing. Now, this bear move to the downside, very likely to at least see another attempt. It's not very likely to have a V bottom, but if it does, what a perfect location, or right off the L2. So it feels like it's the worst spot in the world to want to be a buyer right now, but realistically, the swings are already long. If the L2 breaks, the next point of interest very likely going to be L3, which is confusion, which would make sense because a lot of buyers aren't expecting an L3 right now. They're expecting L1, 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 L2, back up to the highs, L1, L1, keep this thing going. So if this L2 moves up, gets the targets for those short-term buyers, but reverses back down, we've got some issues. That doesn't mean that it can't reverse back up. We saw an L3 over here start this whole thing off. It can definitely happen, but it's a lot harder if they're not doing what they're supposed to be doing. And with this bear move to the downside, it would make a lot of sense to see at least another attempt. Can't ignore that L2 though. Jeez, oh Pete. All right, looking back at the 500 tick so far and seeing where we're at on the shorter term. I mean, obviously, the Asian session to Euro session transition, the Euro session's massive. We had this huge move to the upside and then a giant dump back to the downside. A lot of times, traders will be looking for that to be a double up, double down scenario. So if you take the top to the bottom, the first zone of support's usually at the halfway point, which, I mean, give or take. If you're using fibs, they probably hit a 618, right? It's self-fulfilling prophecy. Let's see here. Yep. So they got that 618 down there and then rotated back up. In terms of the continuation that we've got going to the downside, I mean, what do we have in terms of this first cycle? What, like Elliott wave, this is the top, and then this? Like, holy crap, that's a 7-to-1 leg. You know, so that's no joke to the downside. The continuation making sense being a 0.5. It doesn't have to go that far. It had a 7-to-1 middle leg. Now, that doesn't mean that we can't have some really nice little ABCD corrections in here, 1.5s. They failed, rotated back to the downside. But this could grow up, and that's what I'm getting at here. This could grow up into a significantly larger pattern if it wants to take off. Because if we're looking at it from that side, then really, this could be the first pullback. And then we're looking for a middle third leg, which is a monster. The bulls really need to see this thing churn higher. Big time. From the top to the bottom, the beginning of the day, let's go all the way. We've got the POC at the bottom now. Before that low, when did they transition that? The POC, okay, so let's assume for a second that the POC, normally I look at it as trapped traders. Let's flip the script and look at it from the perspective of these aren't trapped traders. These are traders who are in the profit. They're in the green. These are successful traders, right? They're in all the way down. Where do they get out? Well, we won't know where they get out until we see a POC shift. Once the POC is shifted, that would demonstrate to us that those sellers have now liquidated their position. They liquidated right here. That was their position, assuming that that was their entry point. So what that tells us is we're kind of on neutral right now, right? We don't have an entry. We don't have an exit. The last POC was at 14,830. Nothing's really changed since then. All we know is that sellers have taken initial targets off, and likely if it does make it all the way back up to the top, it's going to be back at break even for them. They're not going to hang out. It's back at all-time highs. So, you know, here's the thing. The sellers are driving this thing down very aggressively, but who's left to hold it up if they're already taking profit? And now at the moment, the market's above the POC, making it even more awkward. So we're kind of maybe at the beginning of a new story, or at least closer to the end of the last one. Yeah, I mean, when you have this kind of aggression, really what it comes down to, yes, there's going to be divergences all over the place, but really understand how the indicators are calculated, right? If a market is moving nice and slow and smooth and nice and easy, right, going like this, even if it were a trend, nice and easy, nothing too crazy, just, you know, it's typical movement. The indicators that are plotting along with it, taking time into account, aren't going to act very erratic. They're not going to have anything out of the norm. So divergences in these scenarios where it's just kind of everyday business, but it's diverging away, this is where you'll usually see an undertow. It's your typical normal everyday movement, whatever kind of stuff, and the undertow is beginning to form as it grinds. The other side of things, though, is when you have this happens and the market just tanks. Right? Now, obviously, there's going to be a divergence on that because this is going to very aggressively reposition all of those indicators. They've got to recalculate for this massive move. So more often than not, that's going to force this to pull down really aggressive. So the next time it comes around, it's naturally going to be a lower high. Right? So, I mean, kind of understand what's going on. Yeah, there's definitely divergence there because of the way that it moved. And that's why I always talk about, like, indicators are great as a resource, but once you kind of understand the way that they calculate and how they function, and every indicator is different, obviously, they become largely useless. Like, here as an example, is probably not going to be a stochastic divergence. Stochastic is a quicker indicator, and this is a pretty decent distance between the two. Noting that, it would probably be a divergence on a MACD then. MACDs tend to be a little bit slower. We have a slower and a really slow MACD. This might qualify on both. Not logarithmic. Huh, what do you know? Divergence. Let's go to the smaller one, right? The slower one, rather. Huh, divergence. Right? I mean, we don't need the indicator there to tell us that because of how the market moved. The market very quickly swept up off the lows. There's going to be divergence there. So don't get lost in those, right? Don't let that be the only reason that you're taking a trade because, well, then you're going to get yourself stuck. But that will help, yes. Typically, if I'm looking at divergences, I like looking with the with trend type ones. So as an example, with this move up, if we had a negative divergence between the two and we started seeing some lower high action, that would be incredible, right? Because now we're going with the prevailing downtrend in the short term. That would make more sense, at least, in the way that my head works. We got 1 minute until the open. There's the alarm bell. Let's see what this wants to do. So far, we have sellers who may have exited already on this downslide, down at the 14,830s on average. Although, I mean, they weren't exactly shy about where they had their targets sitting, huh? Yeah, there's some big jumps out there. See what the open wants to bring us. Okay, there's the open. We have a nice gap to the downside on the S&P. You'll notice, so if we look at where it is, it's inside yesterday's action. And coincidentally, not really, it's also back to the spike and channel beginning point. How strange. What a weird place to find the market pulling back to. So seeing support immediately out of the gates on the S&P kind of makes sense, right? Having a bull bar here would make sense. Seeing the bulls defending this would make sense. So. Give me 1 second. My daughter needs some help. All right, there we go. First 5-minute bar. We still got about 2 minutes left in it. The market's trying to grind its way back. We've got that V-bottom potential. We know the sellers have already exited, if not everything, a good chunk of their position down to that POC change lower. So everything kind of makes sense here to see this bullish continuation, for now at least. Starting to transition back above the moving average cluster as well. Sheesh. Just rip their faces off. Look at this, all the way up. Attempted selling pressure in the top of L1, attempted selling pressure at the next one, selling pressure at the L2. Nobody even showed up at the top. We've got L3 sellers at the top and bottom. We've got L4 sellers. Sellers are scaling in basically the whole way up so far, and not a single pushback down has happened. Massively underwater at the moment for shorts. If we can get a little bit of a pullback further down towards the 830s, that's where swing traders will be looking for longs because the risk is very, very good. We were talking about how yesterday the swings were buying that big dip. Well, that obviously worked incredibly well, but this is kind of the same mentality where the majority of the dip already happened without people. So they're kind of buying in immediately, just trying to make sure that they get positioned in time. This dive down then doesn't really make me concerned too much, right? That kind of fits what we would expect here. A lot of sellers are potentially stuck. We now have a new POC shift to the upside. This would make sense that buyers bought at the open, basically. They felt kind of pressured in. It would be nice for them, and me, to get a little bit more of a pullback. That'd be handy. Oh, geez. POC shifts back to the upside. Now remember, we already kind of had an ending to the story. We had the shorts in and the shorts out, assuming that, you know, they were the winners of that match. So seeing this POC forming in the middle, we've got to kind of wait and see. What does the market do with this? It's kind of going above it. It's kind of going below it. It doesn't feel like it's made up its mind quite yet. Although it did shift up, and the market had a nice rally higher. It would make sense that these may be buyers trying to get this to continue. Look at the S&P candle. Holy crap. All right, so the first 5-minute bar on the S&P, I mean, how relevant that's actually going to be compared to that Jumbotron candle back there, we'll see, but 75 is the POC. Also, I do want to take note of where the top and bottom of that candle is, because that will play a huge role in where support and resistance will come in. I will label the bottom of that candle green. Actually, let's use a color that I haven't really used so it'll stand out. Let's go with like a magenta. So that'll be the bottom of the candle and the top of the candle. 1175. One more tick down. There we go. 1675. One more tick up. There. Market's trying to transition below it and above it. We've got a little bit of a wedge going on here. As far as the impulse POC goes from this entire thing, if we go all the way to the downside, that's still way up at the top on this most recent move. They're trying to build it here at the 1856s. From a corrective phase, A, B, C, D, a perfect one at least, would put it at 747, which would fill in that big VVP they left back in the 760s. Finding some resistance back underneath the POC. Kind of an open door here underneath us. If this starts breaking below the 850s, there's not much to hold it up until the 30s, 27s even. Starting to churn back underneath it. Still doesn't really feel like they've made up their mind yet, but I do like this continuation breakdown. They kind of pierced down into that zone, put in a good chunk of volume down there too. Feeling a bit wedge-ish, kind of, sort of. Still doesn't feel like it really knows what it wants to do. Sellers are trying, but they're not getting anything done. S&P goes into bar 2 as a doji. Lovely. What the heck is going on with my snapping? There we go. 43.69.75 for the S&P. Now they're back above the POC again. 3 lower highs, 2 new lows. Man, this thing's really up in the air at the moment. Nice bull bar back to the upside. This bull bar could be the decision maker. That rotation back to the upside, incredible bullishness. See if they can get a little bit of a dip back down after that reconfirmation. That will start getting swings interested, even though the POC is kind of in the middle, back to the upside. Would be nice to see a quick little jerk back down to maybe even poke through the 56s. Or don't even hit it. I mean, that's one way to do it too. I'm going to grab this little pullback here for a continuation back up. I don't think this is going to stick around very long, and if it pops above the top of that bull bar, chances are we're going to get a nice little pop attempt, at least, to try to get a jump through 70s. Beautiful continuation. There it is. Very nice. Right up into the 70s. Definitely more of a scalp, but you could feel the way that they were kind of operating that one, where we had that breakout, the retest, then they missed it, and it's like, yeah, limited time here. They're not going to be hanging out for too much longer. I would still love to see that deeper pullback down into the 20s, but it's starting to feel like that might not happen. All right. Good short-term scalpers target for that quick little pop to the upside, now backing off a little bit more. 945 around the corner. Feels like this might just be a flag before another continuation, doesn't it? I mean, it fits the bill. That's why I'm saying swings definitely feel like swings are long. It's an uncomfortable long, but it would be a lot more comfortable down in the 20s. Nice little snap retest down into that zone. Come on. Ugh, man. Oh, NASDAQ. Bulls demonstrating more continuation to the upside. Look at that third bull bar on, not third bull bar, I guess, but third candle on the S&P. Wow. Whoa, what was that? Holy crap, the S&P just snapped all the way back to 69.75. 73 down to basically a 3-point snap in under a second. What just happened? Someone marketed an order, huh? Market exit. Get me out of it. More continuation starting to form back to the upside. Sorry, that was me. Yeah. You gotta tell me first, man. I would have had a limit order underneath that bull bar. Come on now. Continuing back to the upside again. Seems like the S&P traders might have hit the emergency exits on that quick little 1 second flood. There it happened again. What is happening? Oh, man. Maybe not. I don't. Wow. Wow. Got a lot going on. Didn't even, man. Didn't have time for the second one. Okay, fair enough. I get it. Marketing out of, what, like 700 orders at once? That takes some concentration. Yeah, okay. I can understand that. That thing's crazy. Right back to the 5-minute POC, too. Just saying. Looking at some of the other pictures, we can definitively see what's going on here. Drastic V-bottom on the NASDAQ once again. Nothing else. Gold snapping back up just a little bit, but kind of stuck inside that earlier range. S&P's back above the POC. Maybe that's why it's getting so snappy, you know, because they're finally closing above that POC and they realize they're wrong. I don't know. More continuation higher. Hard to not see the potential of a 3-press wedge here. I mean, 14,900 has a ton of volume on it. 3-press wedge top causing some difficulty. This most recent pullback in terms of distance was an L2. I mean, that doesn't really help us a whole lot. The first pullback of the sequence was an L1, then they missed it, then they missed it, then they missed it, then they finally pulled back and it was an L2, almost a 3. It feels like there's a lot of confusion here and not a lot of consistency in terms of the way that this all happened. Obviously, we know that the bulls took over, the sellers got out of the way down at the lows. All very straightforward. But it does feel like it could use one more decisive move to kind of help things become more obvious. Something I'm learning, MES is way boring compared to the MNQ. Oh, that understatement of the century. Not always, but most of the time. It's not that it's more boring, it's just more volume. And it's not just more volume, it's more volume at each level, right? That's the big difference. If you look at the E-mini S&P versus the E-mini NASDAQ, it's about twice the volume right now, 361 versus 152. So, I mean, it takes more effort to work through all of these different areas. It's a definitive patience tester. And the S&P is one of the markets that will really push back against you and test your faith in your system, because you'll have crap like this, right? Well, they'll snap back in a second, and all of a sudden you just get whipped out at break even because you're impatient. These are the ones that will really test you, and the S&P will do that. It's very similar to the bonds in that way. You just got to let it do its thing. The NASDAQ's a little bit more rodeo, ride 'em cowboy stuff, but generally speaking, it's still an indice, and you want to give it its leeway. We are at the first objective for continuation traders to the upside, although it's really weak given how high up that POC is. That's a super awkward POC. And here it sits. A little more continuation back up. Big drive back up into that giant volume node at 900s. Seeing some resistance off of that area. These bull bars on the S&P are no joke, huh? Wow. That tail on the on bar 4 pretty much formed all in a couple seconds. Still able to close it back up again. Second long, forcing buyers to buy very high up into the move, but is firing off here. $11.75 is going to be a very big zone of interest, around 13 as well. It's a nice strong move up, but a lower high and a major point of interest like that makes a lot of sense. Otherwise, the bulls are still in, and we haven't seen them exit as far as like a POC shift or move or anything like that. 913 up there is the naked POC that they left behind. 1175, that magenta line, is the top of the 5-minute bear bar to the downside on that gigantic spike lower. So far, given the limited information that the market's giving us, 0.35 and, whoops, and 0.26. So, you know, 0.3, we'll cut it in the middle. Seems to be about a value pullback, although there's only 2 of those. More continuation to the upside, getting closer to that zone. There's a lot of big spikes in volume up here. First jerk up into the 1175s. Looking for a response back down. Nice quick snap back down. Quick little pop. S&P bulls just not stopping. And nothing happening again. Market trying to push its way back higher. Running back into this resistance zone again. 913's now the top. S&P filling the gap. Look at that V bottom. Holy crap. Couldn't quite make it down to that 1-to-1 move, huh? That POC still hanging out back at 705. Market continuing to grind its way through. Sellers are still stuck down in the 20s. We've seen them add in on every single one of the levels on the way up. Bull bars and a doji on the S&P. Still having some difficulty. No major pullback, nothing changing. Finally, at least getting a halfway decent dip. As far as the pullback moves goes, I mean, again, we did have the L2 with a pretty heavy pullback, almost down into L3. Now with this continuation higher, we haven't even had an L1. So a lot of buyers, given the fact that we haven't broken above a new high, will be looking for an aggressive continuation off of an L1. So from a swing trader's perspective, that would allow entries and stops to be relatively tight while the targets would be back up to the high. And it would fit. So, you know, short-term intraday swing traders in terms of the 2-to-1 will be looking for upside moves. The concern that I have, obviously, is that the 1175 is smack in the way, and I wouldn't want to try to get a target through that. So I think realistically it would make more sense to try to tuck a stop under the L2 and look for a bottom L1 entry, because that puts a target just ahead of the L1175. Makes a bit more sense. Doesn't mean it'll happen, but all right, 10 o'clock. We are at the top of the hour. I mean, geez. Just grinding. Feel free to get those questions in. Hopefully we can get a bit more volatility here, and then we'll transition over into the, extended session. There's the big blow off. Now the problem is this could be exhaustion, but this could also be all those sellers who've been selling on the way up giving up, taking a huge L. So feel free to get those last questions in. We'll switch over to the extended VIP session, and then we'll rock and roll. 2 scalps so far this morning. Nice break back into the highs. Once again. 14,935. V bottom. And this is one of those, the other ones that we were talking about yesterday, how you have those confirmed swings, one of my favorite sucker stop little plays that they do. Put their stop underneath one but not take out the other. Ding, 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 ding. That's ridiculous. Someone hit the pause button or something? It kind of feels like it. All right, I'm not seeing any other questions coming in on the YouTube side of things, so let's switch over into the extended session and see if we can't find a few other setups to get things going. If I did miss any questions, I think I got them all, but if I missed them, feel free to shoot me an email, jhb@ssftg.com. I'll get those all covered for you from there. Otherwise, enjoy the rest of the morning. For those of you sticking around, just hang out with me for a little bit, and we'll transition over to the extended session and see if we can get something going. Otherwise, though, for the rest of you, we'll see you all tomorrow morning, all right? Have a good one. We'll talk to y'all later. Thanks.